EURUSD is the most correlated pair with the XY. So this will be analyzing the Forex market, right, to know where would be the next drawn liquidity on the XY. Okay, so maybe if you trade GBP USD, AUD USD, or other major pairs, right, this video is for you guys. So stick around while we analyze the market together and see how we'll be making money from the market this week. All right. My name is King, so you're welcome again to my YouTube channel, guys. I'm an ICT trader. I trade ICT concept, right? And I share my Forex educational knowledge on this YouTube channel. All right, so maybe this is your first time. Do well to subscribe. Subscription is 100% free, guys. 100% free. Just click the subscription button and also turn the notification icon so that you'll be notified anytime I upload on this YouTube channel. All right, so guys, I'll be taking you to the chart to be analyzing the market together, though it's going to be a Zoom live, all right, with my guys. So we are analyzing the market to know, okay, where is the next drawn liquidity, where do you think price will be joined to next. Okay, so just stick around, guys, as we analyze the market. For any strategy you use, this analysis for you, because my concept is a universal concept such that you can actually use it to trade any setup. All right, the main thing is, once you have determined the current draw on liquidity, okay, what you do now is you go to your entry time frame and trade in line with that direction. So keeping it very simple, guys. So I'll be taking you guys to the chart Zoom class though, so that we'll be analyzing market together. Let's see what's happening in the Forex market this week and how we are going to trade it profitably. And at the end of the video, I'll be sharing with you guys some psychology tips, how I'll be trading, and things that will help us to trade profitably this week. All right, guys, so let's get
all right, guys, you're welcome back to the chart, right? It's a new trading week. Okay, it's a new trading week, and it's a profitable week already. All right, so guys, this is February, and this is the second week of February, right? So we are bouncing back, guys. We are bouncing back. You know, January have really been messy. You can see this price have been ranging, and have been messy, starting from here, ranging like. And whenever we expect to buy, price we sell. You know, all this. So at the point we stopped trading, personally I stopped trading last month, all right? So, but this month at least I'm bouncing back. From last week I was in profit, and this week we hope to be in profit too. All right, so guys, you're welcome back to the chart once more. Okay, as always, we are doing pre-market analysis. Okay, let's look at price. Let's see what price is doing. Let's see what price is doing from the higher time frame perspective, and let's know how we're going to trade it, okay, this week. Okay, so maybe for those that are joined through the general group, that's the UFI Trade Hub, all right, that's not in UFI private mentorship class. You can actually use this to trade any pair, okay, majorly pairs that are correlated with the XY, okay, because we'll be analyzing both EURUSD and the XY. All right, so once I analyze the EURUSD, we're going to analyze the XY, or we start with the XY first before EURUSD. Then those that trade GBP USD, AUD USD, or any the XY correlated pair, you can use it to trade. All right, the main thing, just understand correlation, which I'm going to give a brief explanation about that. Okay, so that's it, guys. Let's see what price is doing. All right, but I want you to, before I start, I want you guys to know that don't take my word for it. Price is probabilistic, market is probabilistic. Okay, anything is bound to happen. All right, but you should understand that you don't need to be right or wrong before you make money from the market. The main thing is analyze what you see based on your concept and execute 100%. all right, so whenever you see reversal, you should be flexible enough to change your bias. All right, if we analyzed from what we have currently, and we saw that, okay, maybe EURUSD is going to sell, all right, and maybe Tuesday, Wednesday we have reason to start buying. I wouldn't mind changing my bias. Do you understand? So that's it. So I will not be holding my bias onto the market as if I'm the owner of the market. No, the major thing is, guys, being flexible and also executing your setup in line with your bias. All right, so how I trade is, as you all know, maybe the mentorship student, we determine the direction bias from the daily time frame. So once we get the daily direction bias, then we go to the week to the entry time frame, which is majorly we use 1 hour or 15 minutes. All right, to look out for entry levels Once we see an entry level, we go to the lower time frame, either 2 minutes, 3 minutes, 4 minutes, or 5 minutes to execute 100% in line with the daily bias. You understand? So that's how we trade, keeping it very simple. So maybe if we use any other strategy, what you need to do is, once you determine the draw on liquidity, the current draw on liquidity, what you need to do, then go to your personal entry time frame. Go to your personal entry time frame and let me move to my listing. All right, go to your personal entry time frame and execute in line with the current draw on liquidity. Okay, so if we analyze the market, you think the market is going to drop to the downside, maybe to take out the buy side essential liquidity. What do you need to do? Go to your entry time frame. You don't need to counter trade. All right, just trade in line with the current draw on liquidity. You wait for your sell setup to form completely, then you execute in line with the daily bias. Do you understand? Okay, so we analyze the market using the institutional order flow concept. All right, so first of all, we start from the daily time frame. Looking at the daily time frame, guys, what do we have? This is our Euro USD. Let's start with the XY right here. All right, guys, this is the XY. This is the XY, guys. Price is very, very simple. So I want you to understand that price books majorly based on liquidity, from internal liquidity to external liquidity and vice versa. Okay, what are the examples of internal liquidity? I use majorly two kinds of internal liquidity. We have other kinds, but personally I use two, which is number one, I use the FVG, that is a gap in price, and I use the order block. Do you understand? These are the internal liquidities I look out for in the market, right? So the external liquidity is the buy side liquidity, the old highs, the relative equal highs, the old lows and relative equal lows. So these are the external liquidity. So once price take out an old high or old low, what do you expect? You wait for a reversal to happen on the daily time frame, then you change your bias, then targeting the internal liquidity. And if you look at price currently now, from the daily time frame perspective on the XY, you can see how price have been delivering despite the range the consolidation we have had in the market. You can see price still delivered in line with institutional order flow. You can see it took out this high. You can watch this. You can see this. It took out this side, buy side liquidity, then return into this gap, internal liquidity. That is FVG, right? FVG, beautiful, is it not? It tapped into it as what? Internal liquidity. Then expand to the upside, buy side liquidity, right? External liquidity, right? So now imagine personally, if you use your entry model now, maybe you're a swing trader, you then look out for entry at this point in your lower time frame, then you catch it, then you hold it to this point. Do you understand? So despite this range, you will not be affected because your stop loss may probably be below this low. You understand? So you target this high, so probably you'll be getting like a very good amount of pips. You understand? So let me say you entered here, so you'll be catching okay, this is the XY, sorry, but almost the same thing in EURUSD. So that means you are catching how many pips to the upside. You understand? So keeping it very, very simple. Then once you reach upside, you take profit, wait for a reversal, which is a swing point. Then you swing it to what? Internal liquidity, maybe at least 50%. Then as a day trader, you just once the reversal is confirmed, you start selling. Each day you'll be selling until into the internal liquidity. You keep selling, you keep moving up. Though market was messy, that's why it doesn't deliver very well. But you can see it still take out external liquidity, taking out this high too at this point. Now right here you can see this, guys currently now. So that's it. Very, very simple, very, very simple, guys. So that's it. Price books majorly based on liquidity, internal liquidity, external liquidity, and vice versa. Okay, so price take out, you can see, take out this high, take out this high, take out this high, return into internal liquidity, this high, internal liquidity, this high, internal liquidity, this high, internal liquidity currently at this point. So where are we currently? So whenever you get to your price now, you ask yourself, where are we currently? All right, ask yourself, where are we currently? That's the major question. So for you to answer that question, you need to ask yourself another three major questions. Number one, where is price coming from? For you to know where price is coming from, you should identify the most recent swing point price have taken. All right, you hear me, right? For you to answer that question, you should identify the most recent swing point price have taken. Very simple. So you ask yourself, where is price coming from? Then ask yourself, where is the most recent swing point taken? So the most recent swing point taken is this high right here. So this high was taken, number one. That's what you need to know. Price is coming from, price came from here, one. Then where is it currently? Into what? Internal liquidity. Do you see it now? Internal liquidity is this FVG. Now, once it gets to internal liquidity, you ask yourself, is it continuing to that direction or reversal form? Is there any reversal form yet? If no, you maintain the bias, the current bias, If yes, then you change your bias. Now looking at the place, you can see today is Monday. Price tapped into this FVG, then closed what as what a contraction candle. Contraction candle, not just contraction candle, but what a flagship pattern. A flagship pattern is a pattern that takes both the high and low of the previous candle. You can see it, guys. So what does this signify? It just a reversal to the upside, guys. It just reversal to the upside. But you know, market is really messy. I don't know. Let this not be another range. But whichever way, guys, we execute 100% until we know okay, this is actually range. Then we stay out of the market. But you can see, guys, it's a confirmation. Price tapped into this gap here. And another good thing is that it is a weekly gap too. It is actually a weekly gap. All right. Do you think price should be going lower? I don't know. But guys, we are using what we have here now. So now, looking at the price, you can see previous week. Let's go to weekly time frame a little bit now because I saw something. You can see price tapped actually into a weekly gap here. I marked here. Price tapped into it and rejected below. All right. Now this is a gap. Now the question is, do you think price is going to be expanding to the downside because previous low is taken already? All right. Do you think price should be expanding to the downside? That is another complication because price weekly time frame is more significant than the daily time frame. So looking at this now, you can see for how many weeks price have closed with a bullish candles. All right. Now, previous low, weekly low is taken. Do you think price should be expanding from the downside? So looking at the weekly time frame, you see that price is actually suggesting a downward expansion because previous low is taken, though it's expanded into this FVG. All right. So the weekly time frame is actually suggesting price to go down. But the daily time frame is suggesting price to go up. Now, who do you think we win? Remember, the weekly time frame is more significant than the daily time frame. You understand? So now the question is, who do you think we win? All right, is it the weekly time frame or daily time frame? To me, most likely, most of the times, the weekly time frame will win. But we should not actually pay less attention to daily time frame because anything can happen. Now, looking at this now, it's a reversal pattern. So personally, I'll be buying. That is it. I'll be buying. Why am I buying? Let's go to monthly time frame. Let me show you something. Let me show you something. All right. So you need to understand this from the higher time frame perspective. Now, beautiful. Looking at the monthly time frame now, what you see, guys? You see that price took out this buy side liquidity right here. You can see this buy side liquidity right there. You took out this buy side liquidity there. Buy side liquidity, right? Reversal into internal liquidity, this other block. Reversal to go up. Previous month low taken. Now, what do you think? This month, I'm expecting a bullish close. I'm actually expecting a bullish close on EURUSD. Sorry, on the XY. Simple. Now, weekly time frame is actually suggesting price to go down. That means if we should see an expansion to the downside of weekly time, it should be a short-term move. All right, but now the daily time frame is actually in line with the monthly time frame, suggesting a bullish bias. So what am I going to do, guys? From tomorrow, I'm going to be buying the XY. If I'm buying the XY, it means I'll be selling EURUSD. Right? So keeping it very simple, guys. Keeping it very, very simple. So this is, you don't need to what is it called, predict price. All right, that's how I do, guys. So now, because of the complication we are having in the monthly time frame now, I'm going to put this level as my invalidation level. All right, so I'm going to put this level as my invalidation. I will just put an X right here. Right, I'll just put an S right there. So it means this is my invalidation level. All right, so I'm expecting price to go up, but if price should take out this low, boom, we are selling this week. We are selling this week. You understand? But price, you can see what's happening. Price, external liquidity, internal liquidity, reversal confirmed, flagship pattern. What does it confirm? Buy. What is the target? This high. After that high, where is it going again? To fill this, you can see this gap. You can see a lot of gap here. You can see this gap sitting around here. You can see those gaps in the daily time frame. Very huge gap, guys. So you can see. Okay, so that's why price is going. And from the monthly time frame, price is suggested. Do you understand? So this is it, guys. Very simple. So I'm buying from tomorrow, but I'm being careful when I'm buying because if this low is taken, guys, I'll be selling. All right, but just know that because the daily time frame is in line with the monthly time frame, I'll be buying from tomorrow. Okay, but invalidation would be if the previous day low, that's today's low, is taken, then we just be in line with the weekly bias. Do you understand? So that's it. If you are in line, then we'll be targeting this other block right here. So that's the anticipation, guys, on the XY. So currently, from what I saw here, very simple, I am buying from tomorrow. Invalidation would be if this low is taken. Simple, guys. So you don't need to, once you have your what's it called, the XY, you don't need to analyze EURUSD so much. All right, you don't need to analyze it so much. Just the same stuff, guys. External liquidity, just the same narrative. You can see just the same narrative, but in opposite direction. The same narrative. All right, external liquidity, internal liquidity, external liquidity, internal liquidity into this other block, dropped. Take out this external liquidity now, internal liquidity, right? Then today close what? Flagship pattern. After what, filling in, and you can see this reacted on this other block, the week of this other block, right? So now flagship pattern. So tomorrow, what are you doing? We are selling. What's the target? This low. All right, that's a short-term target, right? Then the next target is what? This low. Okay, so we take it bit by bit. Let's check the weekly time frame. What do you have? You can see the same narrative, guys. The same narrative. Let's check the monthly time frame. The same narrative. The same narrative. The same narrative. External liquidity was taken. Central liquidity returning to this other block. Reversal confirmed. Previous month low taken. We're expecting what? A bearish close this month. Simple. So that's it. That's the anticipation for the month. Okay. So currently the daily time frame is in line with the monthly time frame, but the weekly time frame is actually saying otherwise. So what do we do? Because we have the monthly time frame and the daily time frame in line, then let's follow the daily time frame for now. But we should be careful as we sell, because invalidation would be if this high is taken. All right. So we're just being probabilistic, guys. So that's it, guys. So if you're using what's it called? If you are using if you're trading maybe GBP USD, then you should be selling. AUD USD, you sell. But just know, I want you to understand something. At times, Euro USD will be selling, you see AUD USD will be buying. All right? Why? Because Euro USD is the most correlated pair with DXY. Okay, most correlated pair with DXY is Euro USD, and next is GBP USD. So that's why Euro USD actually perfectly matches very easily, almost opposite, similar but opposite direction. Okay, then if you are trading USD card, then it moves in line with DXY. So if DXY is bullish, US card will be bullish. Understand? At times it may contradict, but just know overall that US card is like DXY. That is the case that have USD first before the currency. You understand? So USD first before the currency. That's the distance. But the one that have the currency, the foreign currency first before the USD, they moves in opposite direction. All right. So that's it, guys. That's it. Keeping it very simple. That's it. So that's my expression. I'm selling tomorrow, guys. Selling tomorrow. Then my target is this low. Okay. So invalidation would be if this high is taken. Keeping it very simple, guys. Anything that happens, we just accept it. But just understand that you don't need to be right or wrong for you to make money. Because at times you will be actually bearish. And you will actually catch a bearish bias and it will deliver. That is a bearish setup and it will deliver, then price will still close bullish. Do you understand? So that's why I actually love 1:3R or 1:2R, because at times you just catch your entry, then price will still move against you, right? But you made money that day, but you were wrong, but you made money. Do you see it now? So that's why you don't need to be right or wrong for you to make money. All right. So the main thing is 100% execution, guys. See, all right. The next thing you need to know is that this week you should make a decision to follow your rules. Okay, make a decision to follow your rules, guys. Make decision to follow your rules, because the process is actually greater. The outcome of you following your process, the process is what? Good money. All right, once you follow process, number one, you will minimize, not drastically minimize. All right, you will reduce your losses and increase your profitability once you follow the process. Obey your trading plan. So review your trading plan again, stick to your trading plan. All right, make sure you don't try to flip so much. Even if you want to flip 1-2 trades, shouldn't blow your account. Even if you want to flip an account, 2 trades shouldn't blow your account. Personally, if I should flip an account, I will split it into 3. I'll split into 3. Let me say I want to flip a $200 account. I'll divide it into 3. So how much will it give me? That is about $60 something. All right. So once I execute that $60 something, I will target ×3. So that ×3 is almost, I will literally make 100% of my account. Do you understand? But if it should go against me, I only lose once. Then I will use another $60 something and execute again. So there is no way I will do it later without flipping it. You understand? You get. So that's it. That's how to flip, but it's not encouraging. All right, this is a number game. You should focus more on the number game instead of flipping. Why not you test your consistency first? Test your consistency by executing 100%. So even if you have $100 account, fund it, or let me say you have lower account, just fund it. Then execute a particular percentage of that account. If you have accounts like maybe you don't have money, you are a new student and you don't have money so much, maybe you have $10. All right, fund it on a cent account instead. fund it on the cent account and be risking, let me say $2. $2 will be about 10%, 20% of the account, or risk 1%, be risking 10% instead. All right, that's $1. Risking it, because it means if you have to blow your have 10 consecutive losses before you, or you risk 1.5%. So what are you trying to check? You are checking your consistency. All right, so but it involves real money. That means your psychology now will be involved. All right, you don't need to trade the one account for too long. Do you understand? Instead, I prefer you actually fund small amounts, use it to trade. Even if you're a newbie, as a newbie, after learning a strategy, I mean, then fund a small amount of money, fund it in a center account, use it to actually test your consistency and perfect your execution. Once you are good with your execution, then you can leverage on Profirm or fund a bigger account. Then it's just the same process. All right, it's the same risk. You just focus on percentage instead of the money. Focus on percentage. So if you are risking 1%, then good, 5% of the account. It depends on you. Depends on your risk appetite. You understand? But just make sure that 2 trades shouldn't blow your account, or you losing more than you intend to lose. All right, so that's it, guys. So you should be focused on risk management and 100% execution. The outcome of every trade is actually probabilistic. Okay, so whenever we go to we see our setup, what do you need to do? Just understand that. Just accept your loss. Make peace with your loss. Just make peace with your loss. Understand that 2 things are involved in every trade you are taking. Despite how high probability your setup would be, in every trade you are about to execute, just know that 2 things will happen. It's either it hits your stop loss, or it hits your take profit, or break even, for those that do break even. Right, so 2 things are involved: stop loss, TP. Have it in mind. Just try to repeatedly tell yourself stop loss or TP. 2 things are involved. Stop loss, consciously repeatedly tell yourself until you be able to convince your subconscious mind to accept your loss. All right, so once you are able to convince yourself, you do this in pre-market analysis. That is early morning, after analyzing your chart to determine your daily direction bias. Convince yourself before your trading hour. Convince yourself that, okay, if I see setup today, I should know that the outcome of trade is random. It's either TP or loss. Then, after telling yourself that, convince you, trying to repeatedly say it until you convince your psychology or your subconscious mind to be aware. Right? Once you are aware, the next thing is, how much am I risking today based on my risk management plan of that account that week? How much am I risking today? You determine it. You do this before. Some of you sleep. So you sleep. When you used to wake up is during the trading hour, and you try to do everything, do smaller pre-market analysis to determine direction, then you jump in, or you check the group, or you check the this thing. You check the group to see if somebody have dropped pre-market analysis. No, it's wrong. You should wake up before, or you do your pre-market analysis maybe in the midnight, because I think this candle will close now. This candle should close by either 10 or 11. So once it closes, you can do your pre-market analysis by 11. That means you already know your bias for tomorrow. Then you can sleep. So even if you wake up by trading hour, you already know your bias. Right? But it's wrong for you to wake up during your trading hour. Then you are trying to do everything. You may think you did right, but you may make mistake. Someday you will make mistake. I tell you from experience. So the best thing is do your pre-market analysis before your trading hour. So that time you'll be able to do, you can even do meditation, right? So that you calm yourself down and be able to execute very well. So it's very simple, guys. Wake up, do your pre-market analysis before your trading hour. I know I'm saying this because some of your trading errors is because you do your pre-market analysis during the trading hour. It's wrong. No matter how good you are, it is wrong. So it's better you prepare, you go to your chart ahead of time. Prepare, determine the direction bias for yourself. After determining it, for those that is in UFI group, then you can go to the group or go to the UFI trade hub. If I have dropped my bias, then you can use it to confirm your own, right? Then you stick to your bias, stick to it. At times, I may even go against your own bias. Still stick to your bias. Then maybe if at the end you are wrong, then you learn your lessons and improve. Do you get? Or you see to the reason why. Okay, if you're bearish and I'm bullish, you see to the reason. Okay, maybe you ask in the general group, why am I bullish? Then somebody can answer you, or personally can answer you. So okay, this is why I am this. Then you compare your own and then you know the one you stick to. You understand? Based on logic, not how you feel. You determine your direction bias based on logic, not by how you feel that price is going to drop. No, you don't work by feeling here. You work by data. You use data to determine, not by you feel that market is going to. You understand? And some of you, that is why you miss entry. At times you see your entry like displayed before you, and you feel that market is going to drop lower. Well, who told you? Some of you will see 2 FVG for entry confirmation. You will be telling yourself you feel that price is going to reach for the second FVG. Why not enter that first one? Even if it moves up a bit, it doesn't matter, because it's still the same risk. Just what will be different is that the delivery, the expansion now will be a bit larger for your TP to hit. But it doesn't matter, right? Is it not better you take 1:2 on a trade than missing out? Missed entry is more painful than stop loss. Hope you know. So that's it, guys. So just make sure, do your pre-market analysis, follow the process, follow your trading plan this week, review it, follow it, decide. Most of you know that you're not good in trading, but you don't follow your plan. All right, so decide today. Don't disobey your plan. All right, don't disobey your plan. Some of you're disobeying yourself. When you disobey your plan, you're disobeying yourself. And if another person disobeys you or disrespects you, you wouldn't like it. That means, and now you are the one disobeying yourself and disrespecting yourself. You say you will not do this and you are doing it. It means it's an insult to your personality. So stop insulting yourself, stop disobeying yourself, and stick to your rules, guys. So that's what you should be doing this week. And don't trade based on feelings. Market doesn't care about what you feel. You see 2 entry this thing, take the first one. Don't wait the second one. Take it. It's better you take the first one, let it prove, still meet that second one. It doesn't matter. And don't be whenever you take a decision in the market, don't regret why you took that decision. All right, wait for the outcome first. Once you receive the outcome from that decision you take, then during when you're reviewing your trade, then you study your mistake, identify it, and learn from it. You understand? Okay, so don't regret when let me say you take a decision. Let me say you take the first entry and price still pulled up to this thing, to the second entry, which would have given you a lesser stop loss, right, and giving you a quicker delivery. But you start panicking. I would have. Next time you will try to wood, and the wood will not wood in your favor. That is a missed entry, and you start panicking. It will mess your psychology. So it's better you execute first start entry, pam, and you'll be happy. One day you'll be happy that you did. All right. So guys, that's it, guys. Make sure 100% execution. Do your pre-market analysis before your trading hour. 100% execution. Set your target, right? Don't be greedy. Somebody chatted me, though the person is not in UFI, but the person chatted me that he had a target of making so amount in a day, and he already made an amount now, but he feels that market is going to reach to this point, and when market get there, he will be making so amount that is almost times 2 of his initial target. He was asking me, should he close or hold it? I say, what my reply was, follow your rules. You made a rule of this, making this amount. Now you have made the amount. Now you're feeling that. What if market didn't get there? I didn't tell him. I just wrote, follow the rules. He asked me again. It doesn't mean I reply again, follow the rules. And he have to close. And he thanked himself for doing that. So some of you don't work by feelings. If you're targeting 1:2, take profit. And whenever you take profit, anything that happens when you're out of the market is none of your business, because at times you take profit and market will still expand 100 pips further in your direction. Now you will start regretting. You will come and edit your this thing and draw a long distance. Say you draw a long let me say this is the setup. Let me say this is the setup, yeah, and you draw a longer distance and saying, imagine how I wish I held. You then you remove this thing, extend it till this point. That is 1:4.8 or almost 1:5, right? So you say, imagine had it been ahead. You start imagining. Next time you try to hold it to this point, and it will reverse from this point. Like at this point, it reverse to your stop entry, then hit your stop loss. You will lose the whole 1:3 point something error. You shouldn't be greedy, guys. Follow your rules. If you're from your edge. No, I am telling you, this is the reality of this thing. This is one of the all this is our experience, right? So you understand. Some of you are still doing the same thing. All right. So now, once you target 1:3. If your setup stick to 1:2 IR, so even if you close your trade at 1:2 and market expands 100 pips, it's none of your business. So just take this one home. This one, let me close with this. Anything that happens after closing your trade is none of your business. All right. So tell yourself, anything that happens when I'm out of the market is none of my business. It is not your trade. Any setup that forms when your number of trade is met for the day is still not your trade, even if it is in line with your strategy. Do you hear this one? Any setup that forms outside your Q zone one, or after you have taken enough trade, maybe your strategy is take one trade for the day and another setup form, and still is not your trade. Your trade is the one that falls in line with your trading plan. Now what you do is, after the outcome of everything, then go to your review room, or during the weekend now you'll be doing general review of your trade, then learn from it as an experience, take it down as a data in your journal. Wait for next week, do the same thing. Then at the end of the month, you do general review and see, okay, what do you learn from the outcome of all your trade for the month? Simple, guys. Simple. Keeping it simple, guys. So that's it, guys. I think we have actually learned a lot. Okay, we have come to the end of this. So it's a profitable week already, and I pray that you receive the grace to execute 100%. I pray you receive the grace to manage your risk, and I pray you receive the grace to follow your trading plan. All right, guys, I wish you all good luck. Till the next time, guys. Bye for now.